So the jurisdiction is good. We work with the government officials to get this built. The goal is to get this property over time to 100,000 ounces of production. As the plant gets bigger, your processing costs per ton come down. Right now we're looking at grades of around 1.8 grams a ton throughout the deposit. There was really good artisanal workings there. Really good samples. I'm very excited for the exploration potential that we're seeing around this property. I think the real value will come through the drill bit. I'm smiling. Stay tuned.
All right. Today we're having a discussion with Stephen Mullowney, the CEO of TRX Gold, a gold mining company with operations in Tanzania who have been growing their gold mines substantially over the past 3 years. They are producing gold as we speak, they are profitable, and they might just be undervalued at this $100 million valuation we are currently looking at on the stock market. At least that's what we'll try to figure out today. So Stephen, it's great to have you on the channel. Welcome. Perhaps we can get started with a short and sweet 30,000 feet overview of your business.
Yeah, no, thank you for having me on the podcast today. It's greatly appreciated and look forward to the questions and figuring out if we're undervalued or not. I suspect we are. So TRX Gold, we are a company listed on the TSX and New York Stock Exchange American under symbol TRX. We have a property in Tanzania in East Africa. It has 2 million ounces in the measured and indicated category at around 1.8 grams a ton. We are currently mining that property through a 2,000 ton per day processing facility, putting together future plans for an increase in that processing capacity, as well as the exploration potential of the property. We believe there's a lot more gold on this property, and we'll get into that today around the trends that we see in Anfield and Stamford Bridge and other spots. And we look forward to continue to grow the company and create value for shareholders.
Excellent. Thank you, Stephen. And perhaps we can dive into that plan that you currently have. You already started outlining the tons per day. Of course, translating that into an ounces figure, which an investor can model with, is a bit challenging. So perhaps you can help us along. What kind of figures are we talking at? How many ounces a year can you produce with that, with your current resource?
Yeah, currently right now we're an open pit mine. So with that, the grade profile going through the mill, it's all dependent on grade profile that goes through the mill and the number of ounces you're going to produce. So last year and the year before we produced around 20,000 ounces per year at around $1,000 cash cost per ounce. That will be increased this year. Our year end is August 31st year end, so August 31st, 2024. So you'll see an increase in that for the year ended August 31st, 2025. Probably somewhere in the range of around 30,000 ounces or so. We are now looking at that plant. We built it quite cheaply, a lot more cost effective than a lot of other miners have done. So the plant cost less than $20 million. So now we're going through and increasing the efficiencies of that plant to get the recovery rates from 80% to much higher than that. And that's going to require some capital investment, not much will be paid for in operations, to start looking at that and increasing that efficiency.
Excellent. And perhaps we can also dive into the mine plan you have over the next couple of years. You started hinting at it's an open pit mine. Yeah. Will it remain that way? And how much life of mine do you have in your current resource?
Yeah, so the life of mine is quite long given the amount of gold that we're currently producing. The goal is to get this property over time to 100,000 ounces of production, 10 plus years mine life. That will require some exploration success as well in order to really solidify that. But right now, when you're looking at the open pit, it will go anywhere, I would say, 5 years plus, and then you will eventually transition into underground. The financials and the strip ratios and things like that will determine how quickly you go underground, but that's on the Buckreef main zone. As I mentioned, there are other near-surface resources, both the extension of that main zone to the south and to the northeast, as well as the Anfield zone and other really good targets along the property to increase that open pit mineable resource.
All right, excellent. And you already referenced a cash cost last year, or at least this year, of roughly $1,000 an ounce. Should we also model with that figure into the future?
Yeah, look, what we're seeing is that will be a fairly accurate figure. As I mentioned, we're going to increase the efficiency of the plant. As the plant gets bigger, your processing costs per ton come down. We're looking at ways to lower mining costs as well. Obviously, we're in the sulfide, so it's more expensive than being in oxide. So that's roughly the number that we're going to be using for our forecast.
Good to know. And you hinted at growing your plant capacity further from this 2,000 ton per day figure. What should investors expect from that?
Well, we're still in process of around what that would look like, but obviously in the way this was built, on a bootstrapped approach and a cost-effective approach. We have 4 ball mills operating, so 3 15-ton per hour ball mills and 1,000-ton per day ball mill. When you look at that, I would suspect that you'll be looking at taking out the old mills, which are the 3 smaller ones, and replacing them with a bigger one, as well as putting in some bigger tanks, and then putting in a flotation circuit as well. So, I would see a much larger ball mill than 1,000 tons per day going in there. That's what I'll put it at right now. But we're working with our consultants to figure out what that size should be.
And Stephen, something I would love to highlight as well. When I was researching your company, I actually just started looking at your share count, and what I find admirable about your corporation. By the way, I'm not an investor just yet, and I'm not being compensated for this video, so these are just my opinions. But the share count of 2021 March quarter was roughly 255 million shares, and you've only really grown that to 280 million, while increasing your plant capacity roughly 10 to 15x, depending how you look at it. How have you managed to do that, and will you continue to be able to grow your plant output to that 100,000 ounces a year figure without diluting shareholders?
Yeah, so when I came in just over 3 years ago, the company was bleeding cash, had issued quite a bit of stock. It needed to be turned around, so we turned around the management team. We also recapitalized the balance sheet at that point in time and put in place a business plan that was good on shareholders. So we did one capital raise and then another one a year later. That is where the share counts got up to where you described. We haven't issued capital since that period of time. Roughly have the same, cash balance on the balance sheet today of around $8 to $10 million. I suspect that will start to grow, and we'll continue to reinvest in the business and grow it. There won't be further capital raises unless we see it being accretive. So the word dilution, that you use as an increase in share count, I look at it somewhat differently. If I can get really, really high returns and it's accretive to shareholders, then we would look at it. But or we see removing overhangs and things like that are in the markets. It would have to be something that would benefit shareholders for us to be doing capital raises. Certainly not going to do capital raises just for the sake of doing capital raises.
Good to know. And perhaps you can dive into how you actually managed to get your plant at the place it's currently at, roughly 10 to 15xing your output in that 3-year time frame, without that large capital raise that other companies would have done.
Yeah, so what we did is we had a test plant which was losing a lot of money, and so we upgraded that test plant to 15 tons per hour. That started to create some cash flow. We utilized that cash flow to increase it to 1,000 tons per day. Then we utilized the cash flow from 1,000 tons per day to increase it to 2,000 tons per day, working with our local suppliers in Tanzania as well to help finance that plant as well, from cash from operations and a little bit of cash from corporate as well. That's how it was done. It's basically a build-up on a build-up on a build-up. And the next expansion more likely will be a build-up on the build-up.
And are there any negatives associated with continuing to add on to that test plant? Do you perceive any recoveries that are lower than what you would have if you had built a plant in the first place? Is there anything that investors should know regarding that?
Yeah, I would say, look, it's not, the test plant is no longer there, right? So it's not a test plant on a test plant, it's just a larger plant. The benefits are, it's good on shareholder capital, good on share count. The drawbacks are, it's a little bit slower to get your capacity up. And so you're not going to go from 0 to 100,000 ounces per year as if you did it the other way and raise significant capital and debt and equity. You will build up more slowly, but you'll have a lower share count. You also, the benefits are, you reduce the risk profile in cost overruns, time delays, all of those sort of things that have ended up killing shareholders in other projects. So you get to manage those sort of risk a lot better.
Good to know. And Stephen, before we dive into your exploration potential, which I think is very interesting as well, perhaps we can end off with a short free cash flow or operating cash flow prediction for the next fiscal year that's coming up. We already heard what kind of ounces you think you're going to produce, 30,000 ounces. We already know your cash cost, but perhaps you can put those figures together.
Perhaps again. I will let we're going through the budgeting process and year end here. When we're ready to put those numbers out, we'll put those numbers out. But what I can say is, on the operating cash flow, I think we're around $15 to $17 million in the last year. I would expect that number to be higher in the upcoming year, and that would be reinvested back into the business.
All right. We'll have to leave it at that then until you are ready to put those figures out. Perhaps we can now transition to your exploration potential. Buckreef is, of course, already a large deposit, 2 million ounces as we speak. Perhaps we can first start off with that. What kind of grades are you looking at, and what kind of mineralization are we looking at with Buckreef?
Yeah, so you have a shear zone, which is quite wide, and it has good continuity. So that goes over 2 kilometers long right now. It's down to around 750 meters. So when you're looking at the 2 million ounces, they're not all mineable today. And so you put together a mine plan because it's under old rules. And then when you put in 2003 rules, and then now we're putting together the mine plans for how long the mine will be there. The ounces are there, but you got mineable ounces as well. The new rules, when we come back to market eventually, will be under, I believe, 2019 rules, which is just mineable ounces. So right now we're looking at grades of around 1.8 grams a ton throughout the deposit in what's defined. And that is just in the Buckreef main zone. And we'll get into it in a second. I'm sure your follow-on questions are, okay, the Buckreef main zone is around 2 kilometers long. Where is the other gold, and where are you guys going to explore to bring that in? Because the focus will be on mineable ounces going forward.
All right. Well, perhaps we can dive into that.
This is from our corporate presentation. You can get it on our website at trxgold.com. Everything I've been talking about in the 2 million ounces in the Buckreef main zone, can you see my cursor, is between these 2 stars. So we've had the northeast extension where we've had some really good drill hole intersects. To extend to the edge of this special mining license, which is 16 square kilometers. We also have good intercepts and artisanal workings to the south of the Buckreef main zone as well. We believe that this property will go to the total length of the Buckreef main zone will go to the total length of the entire property. Also, what we have been discovering is the Anfield zone. So there was really good artisanal workings there. Really good samples come from grab samples, as well as some good initial drill hole intersects along this trend here. It is just as long, we believe, as the Buckreef main zone. There's no defined resources along here. There's some defined resources in the Eastern Porphyry, but we have the Eastern Porphyry as well as a Chinese mine off to the edge of the property that connects this, and we need to drill that out. Again, this is the same type of structure as the Buckreef main zone. There could be a lot of gold there, but we need to drill it out. Now, what we've been releasing over the last couple of weeks is a new discovery, which basically comes along here and goes across from the Buckreef main zone to a structure that's over through here. And that has, delivered our best drill hole result to date. We're well over 200 gram ton meters. And it's roughly 60 meters below surface and dipping. So we're very excited to what is there. We're currently drilling there, so I'm smiling. Stay tuned. and this was discovered as a result of mining. So when you looked at the pit, and you could see, I saw this last week when I was in Tanzania, you could see the structure moving across. So we're there, oh, that's funny. That's ore. That's just like the Buckreef main zone. So that's how we went in and started drilling that out. So it doesn't come exactly to the surface like the Buckreef main zone. It's just under the surface. That's why it wasn't discovered before. But we're very excited with what we're seeing there. It's wide. It's good grades. The structure's intact. So between that and Stamford Bridge and Anfield and other structures that we have on this property, we think there's a lot more gold here. Time will tell. We do need to drill it out. And there's probably higher grade gold than what we have in the Buckreef main zone for processing. So I'm very excited for the exploration potential that we're seeing around this property. I think the real value will come through the drill bit. Production's great. It's low cost. It's increasing. But I think we're going to quickly turn into a project that the production's a means to an end to really drill this thing out.
All right, that smile is probably a good indicator for speculators and investors at home. Perhaps we can dive into, you were talking about you have two parallel trends and one diagonal trend. Where those trends actually intersect, is that an especially interesting zone where you could get really high grade stuff, or is that not really of concern?
So I can't comment on that yet. Typically, you do see good grades in these structures, especially the cross structures. But the Buckreef shear zones, they pinch and swell. So as fluids move in the pinch areas, there's higher grades, but it's less wide. And then when it is wider, there's lower grades in those areas. And that's typically what you would see in these types of structures.
All right, good to know. And you are drilling as we speak. When should we expect assays?
We had assays in the last couple of weeks. You should see a consistent flow of assays going forward. We have one drill rig on site right now, and I suspect that will increase.
All right, good to know. Perhaps we can dive into your jurisdiction where you're operating in. I think we have a great picture of your exploration potential. The parallel trends are definitely clear, and now the proof is in the drill bit, I suppose. So thank you for taking us along there. You are, of course, working in Tanzania. Perhaps you could take us along how the jurisdiction is like and how that is working for you.
So the jurisdiction is good. The government wants investment into the mining sector. It would like to increase the mining output to over 10% of GDP. We work with the government officials to get this built. So the Mining Commission and the various regulatory agencies and in permitting and licenses, and that has all worked very smoothly. What I would say with regards to the workforce is good. There's been mining in this area for 25 plus years. It has universities to, educate professionals from geology to engineering to metallurgy. And so that has been really good because you're able to get a workforce. So the human capital aspect has been good. We're 100% Tanzanian on site. We are about 3 hours away from the port of Mwanza on Lake Victoria. What's good about that is it has an industrial base along with the mining industry to be able to build things cost effectively. For instance, the tanks are built by shipbuilders out of Mwanza, so that has worked very well. We've been able to get everything in from an infrastructure perspective in the port of Dar es Salaam and bring it up through. No problems there getting offshore equipment in. And we also bring in some equipment via South Africa as well and up through on the road. So all of that has worked out extremely well. With regards to the national level, it's been good as well. We are in consistent engagement with the government. The government is, as I mentioned, welcoming foreign investment and is wanting to set the stage for future growth. And I'll leave it at that. I was in Tanzania last week meeting with government officials and others. And so I think it's a good jurisdiction to be doing things in. It's geologically rich. There's large mines in the area. Anglo has one of its larger mines in Gaeta. Barrick has its Bulyanhulu and North Mara complexes. Shanta has 2 mines there. And Perseus just purchased OreCorp to make that into a very large mine as well. All of these mines, the majority of them are within 30, 40, 50 kilometers of our mine. Tanzania as well has a Julius Nyerere facility coming online. I believe the first couple turbines are starting to turn there. That's hydroelectric. Tanzania should become a power exporter. We're connected to the power grid. We only have 15 kilometers of unpaved road to our site, and we now maintain a large portion of that road. The rest of it is paved. There's a new bridge going across the Sound in Mwanza, so we can drive essentially from Mwanza right to site. And thus far, the infrastructure has been good. So both the human capital and now the government framework has been all positive.
All right, thank you for your insights there. Perhaps we can also quickly touch upon royalties and taxes, oftentimes a needed topic to discuss for a mining company. How are those like in Tanzania?
So the royalty is, including the local royalty, is 7.3%. So it's comparable to other jurisdictions in Africa. The tax rate is 30% on a corporate tax rate. The VAT is 18% and refundable. You can carry forward your losses against taxable income. I believe you have to bring in about 10% of your income. You can't deduct all of it. I think it goes up to 80, 90 or 80%. You can carry back against your income. And right now, we have a 45% joint venture interest with Steminco, which is a state mining company. That is now, the 45% is a dilutable interest because we're into commercial production. And we're currently in discussions with the government around that to make it an investable agreement. And I'll leave it at that. I was in Tanzania last week.
Okay. So I guess that percentage we should expect to decrease, but we don't know how much yet.
So the framework agreement that the Tanzanians have published is a 16% non-dilutable interest. You will see that if you do searches, you'll see what that looks like. And obviously it would be negotiable. Which way this will go yet is still to be determined. And how it would look like is still to be determined as well, but those discussions have started.
Excellent. All right, great. Then the last thing I would like to confront you on, Stephen, is your balance sheet. I have to be fair towards TRX Gold. It's really clean. There are two posts I would like to discuss. Your amounts payable and accrued liabilities, 14.5 million last quarter. Yeah. What is that all about?
So the 14.4 million, obviously there's some corporate liabilities there, as well as that's your mining contractors, people have built assets for you, regular payables around reagents and other things. That's what's really included in that. So part of that is what I would say a couple $1 million that's related to the build, and we pay down over time. It is a little bit higher than what I would consider normal, payables balance, but it's certainly not out of the realm of being responsible.
Yeah, exactly. So we should expect the figure to drop a bit once you start to go into full commercial production as is normal.
Yeah, and once the plant's ramped up, we are into a little bit of a stripping campaign. Once we get through that, then you should start to see those balances come down a little bit.
Excellent. And of course, for viewers at home, there is no long-term debt on the balance sheet of TRX Gold, which I think is really admirable for a gold mining company. Another post I would like to ask about this deferred income tax liability of roughly 7.5 million. Perhaps you can also quickly touch on what that is all about.
I have to ask the CFO and the accountants about that. That's a non-cash item. But certainly in any mining assets, you're dealing with differences between capital assets from a tax perspective and capital assets from an accounting perspective. That's normally what is driving deferred tax.
Excellent. All right. I think we have given viewers a great overview of first your asset, of course the exploration potential. We've talked about some of the risk, jurisdiction, balance sheet. Stephen, I would love to end this interview off, my apologies, with asking you, what are you most excited for heading in 2025?
Exploration.
That's the big thing.
Yes.
All right, then I guess we'll keep our eyes open for that exploration, the drill bit, potentially more than one drill rig on site. Stephen, thank you so much for your time. Really appreciate it.
No, thank you very much. It's nice to be here this morning.